You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That bit of rockin' tunage means it's time to kick off your week with everyone's favorite bi-weekly option show. Yeah, it's time to hit the Option Block. My name is Mark Longo from the old Options Insider. Hope you have a chance to check out the new stuff. Hope you've been enjoying also all the great content that's still hitting the network from all the legion of conferences and events and all the legion of people that I've talked to of late. It's all for you guys. So hopefully you guys are enjoying all of that. You know where to find all that goodness, including us every Monday and Thursday, noon Central, 1 p.m. Eastern, live on the Mixlers. If you want to get it in your old ear holes right away. And, of course, however you listen, live after the fact, hit us up. We'd like to hear from you guys, your questions, your comments. Who did you want on the Iron Throne? All that good stuff. We'd love to hear from you guys. And joining me on this whole Game of Thrones themed edition to do nothing but spoil the show. I'm just kidding. We're not going to spoil anything. Of course, let's go around. Let's go the long way. Let's start all the way out in the hot seat. It's given the fact that the Iron Throne was literally hot last night. Let's start in the Fidelity hot seat. We are joined today by Colin Songer from the old Active Trader Strategy Desk. Colin, welcome back to the show, and hopefully your hot seat is not quite as hot as the Iron Throne last night, sir.
No, I don't think it's that hot. But thanks for having me. I really look forward to it.
And also joining us on the old program here, let's go out to a tranquil land, a happy place, where no one watches such dark television as Game of Thrones. Of course, I'm talking about St. Charles. All happiness all the time, where we are joined by Uncle Mike Tosaw from St. Charles Wealth Advisors. Uncle Mike, welcome back to the show. I won't even bother asking about the finale because I know such things are beneath you, sir.
I can't believe how it ended. It just shocked me. I was so ticked off.
Madness. Everyone died. The whole earth just died. It was crazy. No one wins because they all died. Who saw that coming?
I know nothing of what I speak, so I must confess I don't think I've ever watched 1 second of Game of Thrones. But nonetheless, great to be here and excited to talk about our own market Game of Thrones we have going on.
Yeah, we got a little bit of that going on as well, and also joining us to discuss all this madness. I know he watches a little bit of hashtag GOT. Mr. Meatball, I hear you're just in love with the current season. It's your favorite of them all.
Yeah, no, it was. I was so upset. I had to go to the Dairy Queen Grill and Chill on West Main Street in St. Charles and eat like 3 blizzards just to get over it. It was it was that type of night for me when in what Game of Thrones did to my my ability to cope.
See, I had that feeling after Avengers Endgame. That ruined me for a while.
I haven't seen Endgame yet, so
I won't spoil that one.
Give me a minute.
I had much more of an emotional reaction to that, I will say, than I did to even though Game of Thrones was interesting and there were some interesting developments. And then they all die. Who saw that coming? Just kidding, listeners. Instead, let's keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, when we're not watching such epic television series come to a conclusion, there's a little thing called the markets that we're watching out here, and we're coming into today's show. We're seeing a little bit of a mixed bag out there in terms of, a little bit of spookage, to use a technical term, on the trade war. Is it exacerbating? Is it ratcheting it up? Is China going to hit back a little more? Is there still a little bit more disgruntlement, to coin another word, there behind the scenes? We haven't really heard a lot of concrete info since last week, and the market's getting a little bit spooked today. They were selling off. Now they're not off as badly, really. We're seeing, except for the NASDAQ. NASDAQ was leading the dance and still is now, off about a little over 1%. A lot of that coming on the heels of some tech-heavy names, tech favorites like Tesla, continuing to take it on the chin. We'll get to all that in a little bit. S&P off about 0.5%. Dow off about 0.25%. So, these trade war concerns continue to linger over the marketplace. We're not exactly getting a lot of conciliatory gestures. We know this whole thing's being conducted over Twitter. So we know 250 characters, that's the best way to conduct international policy. So all of that, of course, means VIX cash taking a little bit of an inhale today, getting some of that weekend back, also getting a little bit of love for the sell-off, up about a third of a handle, actually, which isn't that much given how much we're seeing, particularly out there in some of the other corners of the market. About 16 and a quarter, up about a third of a handle. How high do we get today? On the initial teeth of the sell-off, we got up to about 17 and a half intraday, and now it seems like saner heads have prevailed. We shall see how long that lasts. Since we're talking saner heads, let's start out there in the hot seat this week. Colin, it's been a little while since you've joined us on the program. I know a lot of things are lighting it up over there, including some tea name I'm not that quite familiar with. I think it's called TSLA. I think it's a Croatian name. Why don't you tell us about that one, sir?
Yeah, absolutely. So Fidelity Customer is one of the top ones. A lot of common names that you're going to see them coming across, one of them being Tesla. So hitting a 2.5-year low. It's right now, the price is trading below all those moving averages, the short-term, the intermediate, and long-term moving averages. It just seems to be a continuing drama, since that seems to be the focus. That drama just keeps to continue with it. So taking a look at the volume call-to-put ratio. So for every one call, there's about 1.5 puts that are traded, which, to put that in perspective, when we look at the 90-day average volume, it's one call to about 1.17 puts traded. So a little bit more heavy put trading happening today comparatively. Then we take a look at the Apple as well, popped up on there for some of that technology concerns that are being thrown around over the weekend, as well as analysts cutting their price target for Apple. It's right now trading below all of its moving average, the short-term, intermediate, and long-term moving averages. We also noticed that it did recently. So last week it pushed up against that 200-day moving average, that long-term moving average, and it failed to get above it. I know intraday pierced above it, but then it's retreated since. The volume call-to-put ratio on this, so for every one call it's traded of Apple, it's 1.16 puts have been traded. And to put that in perspective, it's evened out, because when you compare it to that 90-day average volume, it's about 1.52 or 1.5 calls traded for every put. Another one hitting on the top 5 was Amazon. So right now, Amazon's sitting between that 20 and 50-day moving averages, but it's still above that 200-day, that long-term moving average. Interestingly enough, the volume call-to-put ratio is 1.25 to about 1 put that's traded. And to kind of give you a gauge, with the 90-day average volume being 1.34 or 1 1/3 calls traded to every 1 put. Now, NVDA also hit that top for all very similar reasons. Price is below all moving averages, the short-term, intermediate, and long-term. But it has a volume call-to-put ratio with 1 2/3 call traded for every 1 put. And to put it in perspective, when you look at that 90-day average call-to-put ratio, it's about 1.5 call to 1 put, so a little bit more heavy on the call side for trading purposes. Those are really what the Fidelity customers have been really focused on so far this morning.
Yeah, a lot of the usual stalwarts with Tesla. You're right, just taking a drubbing, 2.5-year low. Right, it's been a while since we've seen them. For the longest time, it seems like here on this show we've been talking about the 300 level, the 300 level. That's where everyone was fixated. That's where a lot of the audience, our audience at least, like to write their premium around that 300 level, and they'd watch it get close to it and bounce back, and get close to it and bounce up, and get close. Of course, the infamous 420 tweet now and all that other fun stuff. So Tesla has been an interesting dance. I know a lot of our audience lives on the dark side out there, so hopefully you guys have been, shall we say, aggressive with your rolls, or maybe judicious with your strike selection. So you're still here listening to us and not out there having to get a second job or anything else along those lines, because you blew a lot out on the Tesla, drawn an aggressive line on the Tesla 300 strike, because we are pretty much 100 handles south of that now, listeners, off 6 handles. Right around a little bit shy of the 205 level here at showtime. So interesting stuff out here. Uncle Mike, Colin mentioned Apple, and they're having a kind of a strange day. He mentioned a rare kind of downgrade for them, I guess, on all the heels of all this antitrust and everything else like that. We don't see those too often in Apple land. Usually it's just love, 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 love. So what's catching your eye out there? Are you feeling the love? Maybe these levels are more intriguing to you, sir. Or maybe as our listener, I won't get to our listener mail. We'll get to that a little bit later. But they're asking about those 150 puts again. Maybe that's a sign, sir. But what's catching your eye out there today?
All you need is love. There you go. No, I think what's going on, right, this is just volatility in the marketplace. I think that when the S&P is down 0.5% on the day, it's not really a large amount by any means. I think this is just, we're at another level of volatility. Now, what's unique about volatility in our time, in the time we're in right now, that's different from volatility of, say, 10 years ago, or maybe not 10 years ago, let's say 15 years ago, is that a lot of this is coming from the macro side of things, and that we're very concerned with the China trade war. This is just the latest thing that what the market is having reasons to go up and reasons to go down about. 15 years ago, the concern would have been more along the lines of, can this company do this? Can that company do that? And it was a lot more micro. I think the price of oil was a concern 15 years ago. Will oil get to 60 before it gets to 70? Will oil get to 70 before 60? Or back when oil was in the mid 60s, I remember that was a big deal. But what's really happening right now, it's just everything, what's going on with China, quite frankly, what's doing it in regard to Apple. The big fear is that no one in their right mind is going to pay $2,500 for a lower level iPad, which is what the fear is if we have all these tariffs that are happening. And of course, that could be more of an effect to where it would go on down the lines, and we might have to pay higher prices for other goods and services, of course. But that's why I think one of the main fears is, of course, is the tariffs. Now, on the other side of it, if you're a Republican, you may say, well, then we'll just move our businesses from, instead of making the apples in China, let's go over to Vietnam, or let's go over to another country. Well, I mean, it's possible, but it's something that typically doesn't resolve itself very quickly. And I think that's what the main fear is. With all this being said, I still hold to my point that I've been saying ever since the whole trade war thing started, is that there's going to be some type of a deal. When? I don't know. I do believe there's going to be some type of a deal. Trump's going to say it's a landmark deal. Democrats are going to say it was a horrible deal. He gave away the farm. And whatever the case may be, I think that Apple is ultimately going to come up from it. And I think that just technology in general will come up from it, because when you have a president that sells himself on being a business-friendly president, that he's a money guy, and it doesn't look good for money guys if the market goes down, I think he's going to find ways for the market to come up, whether it's the right way to go or the wrong way to go. Once again, I don't want to be political on the show, but the point is that I think ultimately there's going to be negotiations that'll happen to make this work, especially since about 14 months from now, there's going to be a presidential race happening.
Yeah, no sitting administration wants to roll into an election with a $2,500 base iPad, right? You're out. You're going to lose if that's the case. It's the new iteration of the old, it's the economy stupid with Clinton back in the day, right? It's the iPad price stupid. People can't buy an iPad. They're not going to be happy with you. So, I'm kind of with you there. Eventually, we have to sort this out. It might take a little. Clearly, it's going to take longer than the market was pricing in earlier. But hopefully, saner heads will prevail. Saner heads, we don't have those. Instead, we have the greasy meatball. Mr. Meatball, sir, what's lighting up your tape? What are the pit chat crazies up to today? And I think you got a little something in your back pocket for us too, including your stock option pit stock of the day.
Yeah. So, let me start with kind of where you were leading off. That we're right near the lows of the day, and the volatility index is over $1 off its highs. That type of price action typically points toward one-offedness, or even we could be up on the day. We've already seen VIX get close to flat on the day when we're still down 10. The price action of today points toward, if we get anywhere near unchanged, I think VIX is going to make a run at a 14 handle. They are selling the pops in volatility. They are not hedging. And that has been the driver of the day. Speaking of the driver of the day, I want to talk chips and primarily NVIDIA. And NVIDIA is an interesting one, right? They blew the doors off of earnings, blew them off, and their reward is to be off about $7 from where they were right before earnings. And, on the year down over 100 and what? On the year down over $130. Mostly, a lot of it China related, and a lot of it related to kind of the cyclical nature of chips. But it's now getting to a point where one's going to have to start wondering, when does one take a dip in the industry leader of gaming chips pond? And I think it's getting there. Typically you don't see that kind of guidance and earnings and then see this kind of price action if not for some silly macro trading. And so I'm looking at NVIDIA as a very interesting play in terms of maybe it's time to start looking at puts to sell to try and take delivery. With the stock around 153, I can sell, for instance, the July 145 puts and collect about $5.45. That's going to give me an entry price in just above $139. I think that's a level where most people would be relatively pleased with their entry point, and to just kind of see volatility acting the way it is acting. I just think that there may be some value there. I think that it might be time to start dipping our hand in the NVIDIA pond. So that's kind of my stock of the week, stock of the day. One, I'm going to be looking for trade ideas all week to build some sort of long position. This July trade is just kind of my first concept. I know Mike is obviously a fan of selling puts to get into stocks. Have you been looking at the chips at all, Mike?
No, I mean, not so much. I mean, what I'm definitely looking at right now, I think that I'm looking more at the SPY as a whole. I think that with where we're at in kind of a range, I'm selling puts on dips in an oversimplified fashion. I mean, there's a lot more to it than that with where I'm at, but for the most part, I'm definitely selling puts on dips in terms of the chips. I think we're at a stage where I do think a lot of this is overblown, and if we do rally, I could see the chips definitely being a leader in the rally on this one, to say the least. And the way that you're pointing that out, if I was into looking at the sectors, by all means, for sure.
Yeah, and so, Mike, what you're basically saying is you're the reason why every time we dip, the VIX gets lower, because you're blasting size up puts into the marketplace, and it's killing it. Yeah, I mean, you look at NVIDIA, and it is the only it's been in a death cross it's been in a death cross since last November. And it was finally starting to see the 50-day and the 200-day converge, and then we had this kind of recent dip again. It's been as high as almost $200 in the last month, and that is, to me, unless you really think that this China thing is really is going to affect us long term, which I have trouble justifying. But unless that's your case, you got to wonder on this one where what's the story. And so, one thing I thought would be interesting is, Mark, I don't know if you have this information at your fingertips, but I can look at it real briefly. Is where is there a lot of open interest in NVIDIA options?
Well, we can pull that up. I was actually just looking at the kind of the price history over the last couple of years to get a sense, and we are pretty much at roughly half of the high. The high was just threatening 300, right? 293 or so. So 150 is we've pretty much been cut in half since all that fun began. And I remember, a couple of years ago when we were first talking about NVIDIA kind of rallying off the heels of the Consumer Electronics Show, and all of a sudden it got caught up in this crypto wave, right? The crypto win. Yep. And it became kind of the bellwether for all things crypto. And so that of course drove it up. And then when crypto maybe started to turn, we saw that falling off. We're seeing the mining market kind of fell apart a little bit. Now with crypto floating around, I haven't seen where it is today, but it was
around $7,800.
Okay, so close to 8,000 again for the Bitcoin. So that makes mining more attractive. That might be interesting for NVIDIA. And I'm pulling it up here, looking at the top open interest. Again, courtesy of our friend, the Flow Master over there, and his fun trade alerts. If you have Mr. Meatball, do you have it in front of you? Do you want to play the guessing game?
I can play the guessing game. I've gotten a chance to kind of look through the strikes, but I don't have them up per se.
Let's just say the number one position, it expresses some optimism, shall we say?
It's way out of the money. Yeah. I'm going to go out on a limb. I'm going to say it was probably put in when NVIDIA was around 200, and it's going to be in a leap. I want to guess the Jan 2020 250 calls.
Not bad, but actually a lot closer to home. It's the June 300s.
Are you kidding me?
No, yeah, it's the number one position. 15,000 of those bad boys open right now. Not surprisingly, no change in those since the last time. Let me see if I can pull up really quickly.
Well, they're at a penny, so that would make sense.
Yeah, exactly. Let me see the last time these things really printed in size here. Colin, I'm curious for you too. You were kind of just talking about NVIDIA's kind of lighting up the tape over there in Fidelity Land. Are you seeing maybe similar kind of nature to the flow? Are people looking to maybe write some puts to draw that line in the stand to pick it up here? Or are they buying calls? What are they up to out in NVIDIA?
So interesting enough, when we were looking at what customers trade, it's more based on equity flow than what we saw for options based. Interesting enough with NVIDIA, to kind of put a little context around this, is that when I look at orders by Fidelity customers, NVIDIA had 50% of the orders being buys and 43% being sells, just from the equity side. So interesting enough when you look at that and kind of compare to what you're seeing on that option chain, it kind of creates an interesting story, to say the least.
Yeah, these June 300s, the last time they traded for any size was April 12th. It's not that long ago. I traded for around a dime, right in the middle of the market. So I'm going to maybe, hopefully someone got a chance to close out some for a dime, because otherwise they're not looking too good right now. If they bought them for a dime, that was about 2,500 dimes that they're not going to see again anytime soon. I don't think we're hitting 300 by June expiration. That might be a little bit of a bridge too far. And then they traded again. Last time they traded before that for any size was May of 2018, May 15th. So, and that was about 2,000 of those. So a lot of this OI has been open for some time, and unfortunately, they were trading $20, almost $21 back in May of 2018. So, listeners, there you go. Maybe that'll make you feel bad about some of your own trades that have not gone your way, shall we say? Because this guy, whoever this was out there. Hopefully, he was overwriting, but a good chance he was probably buying them for about $21 a year ago, and now they're all you can get for a penny. So, it happens to the best of us out here. Let's look really quickly, seeing the best. We're talking about NVIDIA. See really quickly, come into Showtime, what was lighting it up. Not a huge day. VIX only doing about 250,000 contracts coming into Showtime. So 250,000, not bad for any other name. For VIX, not a lot. ADV is about 650 right now. SPY, a little bit north of 1 million. ADV is about nearly 3 million out there. SPX, about 450,000. ADV is north of 1 million there, about 1.4 million. The Q is 420 on the tape. 783,000 is the average out there. And the IWM, $114 on the tape, 321 is the average. So none of them really even threatening their ADV, given the fact that we had a pretty sizable, and even the Qs. The Qs are probably the closest that you might expect, given the fact that NASDAQ's seeing the worst of the sell-off. Top 10 really quickly here. Number 10, Facebook, 108,000. Number 9, Micron, $122 on the tape. Number 8, Qualcomm, $124 on the tape. They're also getting caught up in that Google and Qualcomm saying they're going to maybe cut some ties with Huawei, given all the interest, all the issues out there. So some of that may be driving some paper. Number 7, Bank of America, $131. Number 6 is what is my quotes are somehow going crazy on me here. There we go. That's Sprint with $143 on the tape. Number 5, AMD, $145 out there. Number 4, good old Telephone, aka AT&T, $169 is what the old timers just call in the SIBO, Telephone. You can tell they've been there for a while and they called it Telephone. Number 3, Baba, $267. Number 2, good old Tesla, $412. Number 1, still with a bullet, Apple, outpacing Tesla to the upside, 400, at least in terms of volume, 428,000 on the tape for all those. And now we're going to keep on rolling. It is time to move on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. I love these kind of live read odd blocks. I don't have a chance to really look at them ahead of time, so I have no idea what we're going to talk about, which makes it kind of fun. I'm going to read it along and kind of analyze it along live with you guys, listeners, which is always fun. Looks like first up, what do we got? We've got Kroger. That's the name. I don't know if we've ever talked about this on the show. If we have, it's been quite some time. Of course, the big supermarket chain. Let's see here. Kroger, ticker symbol KR. Trading today, 24.14 or so, off about 7 cents. Not a huge day for Kroger. Let's look at the year history before we get into this. A year ago, it was trading almost exactly where it is right now, 24.77, so about 60-odd cents north of where it is right now. It gapped up throughout the year to about 32 and change. That high came in September. Then it's kind of vacillated and it got down again to like 26 and back up to 32. So it's kind of been bouncing in that right around a 6-handle range. Then it looks like around March, maybe earnings or whatever it was, clipped their wings a little bit again. They went from 29 down to about 24, and they've kind of been hovering this 24 range ever since. Briefly got up to 25, but not a lot of upside. Let's see what we've got here on the tape. Our Eye of Sauron finding looks like some size puts here to the tune of 10,756 of the July 26 puts going up for $2.43. So this is aggressive. That's below the bid. These are actually surprisingly tight for some Kroger in the money puts, or right on at the money puts. They were 247, 252, so a nickel wide. Which is kind of interesting. They went up at 243, so 4 cents below the bid. Probably has something to do with the fact that he wanted to get 10,000, almost 11,000 done. We said this before. Some of these displayed quotes with the auctions and things, people are not really given their true size. That's nickel wide for probably 50, maybe. So beyond that, if you want to get 11,000, you got to go a little bit wider. This guy did to the tune of down to 243. This was opening over there on the NAM, the NASDAQ option market. These are, July. Earnings are June 20th, so there's a little bit of earnings juice in these bad boys here. Mr. Meatball, what do you think? Line in the sand puts in Kroger. These are in the money line in the sand now, which is kind of interesting. There is an earnings between now and expiration. What are you feeling about these pretty sizable, pretty meaty line in the sand July puts in Kroger, sir?
So sorry about that. The price action of these has been really weird. So with that one print, it looks like they did a big old put sale, but then everything around that in July is put buying. We've seen another 6,000 of these July 26 puts go up on the tape, buying. So, it's been really interesting price action. This appears to be a big kind of, like you said, line in the sand put sale, trying to take delivery. Meanwhile, everything else on the tape is vol buying. So it's just a really strange trade for a company that really doesn't trade very often. Its average volume is only 7,000. That average option volume is about 16,000, and which is, they did almost that in one trade.
Yeah, I'm looking at this. You're here right now, and you're right. There's the big print that we kind of came across our radar, then a lot of small stuff that seems to add up to, and they all around the same time, which is kind of interesting because our big print came up around 10:59, but a minute before that we saw small buy 750 going up for, let's see, what were those, 242. The market was disturbingly tight on that one, 241. So obviously there was something working in the book, right? And they were working it, and then so that those markets are a little bit askew. Shall we say? Maybe they were doing the old trick of putting in a bid to try to hit it, right? But then you see like 300 lots, 200. So a lot of small paper, all trading around similar prices, listeners, of 242, 243, 240, around there. Let me just see if I can have. As I was saying, I pulled an Andrew, actually, he inspired me. As I was saying so interestingly, but yeah, it looks like the lion's share of that volume was in small lot, or the big print, and then the small lots totaling another 6,000 or so, all at similar levels. A lot of the latter kind, 300 here. So it was interesting. The smaller prints kind of started it off, then the big print came in. So obviously, maybe I would say they were inspired by the other paper, but it went up so quickly that I don't think they would have time to shop and get it done all in the span of a minute or so. So it looks like someone was working it, and then they got a ton here, and maybe negotiated a good chunk at a good price below the bid. Interesting stuff. We're going to put this in. I'm going to put this in the to be watched category. I want to come back to Kroger and see. Maybe we can spend a little bit of the benefit of hindsight. We could see what's going on exactly out there in terms of open interest, and also how these folks fared. I'm guessing you guys would like that as well. So we shall do that as we keep on rolling to our next name here, listeners. What do we got here? Another newcomer to the odd block, or at the very least, I don't recall ever talking about this name. It's our old friend Beazer Homes USA Inc., everyone's favorite. Ticker symbol BZH. Trading today, $10.22. A good day for them, up 50 cents, or about 5%. This is the name that's kind of been all over the map over the last year. A year ago, they were trading $15, so about 5 handles north of where they are right now. They got as high as 16 and change. Looks like that was back in July, or maybe a spike there in June. July is when their high of the year was. Then they sold off pretty hard. Looks like, unlike most of the names we talk about, their nadir wasn't Christmas Eve. It was actually right around Halloween, 8.25 was when they hit that. So 2 handles shy of where they are right now. Then they rallied back up again to 13. Not that long later, back up to February, then all the way back up to 14 in May. So they've had a nice run, and then they kind of just looks like it hit the skids ever since May 2nd. I'm guessing earnings didn't go their way. They kind of sold off aggressively from 14 down to 11, down to 10, and now where they are right now, 10.25. So looks like it's been an interesting, tumultuous year. Many peaks, many troughs for Beazer Homes. Let's see what they've been up to today. Today looks like maybe someone's feeling a little bit of the love out here. We got the Nove 11s going up for $1. 8,039. I love the size. 8,039. These are great. Obviously, some were lingering out. They probably had to take off someone's hands, too. I don't think they went out there for 8,039. Maybe. You never know. Lower 11 calls for $1, 8,039 times. There were 90 cents at $1 coming out. These went up for opening on the old NOM. Obviously, between now and November, there's going to be some earnings, the most recent of which coming up on July 25th. Mr. Meatball, what are you feeling on these bad boys here? They're pretty much about 80 cent out of the money calls in November. We're at the lower end, not quite the bottom, but the lower end of that 52-week range. You feeling that someone's feeling the love, or you think something else is afoot?
It feels like a bottom feed, I'll be honest. It looks, the cost is not that expensive, and you're getting a lot of time, a look at least 2 earnings reports. I have trouble imagining someone selling the calls at this level that far out if they're not looking. It almost. I would be shocked if this isn't some sort of buy, because it just makes sense from a kind of a buy side kind of a paper perspective that there's time and value in these calls, and I would lean with paper.
Yeah, it does have that bottom feeling ear to it. So you know what? We're going to watch that one too, listeners. Let's come back to it in a little bit, see how they're doing. Meanwhile, we're going to wrap it up here in the odd block with not Fitbit, easy for me to say, but a very close ticker. It's FITB, which is, of course, Fifth Third Bancorp. Trading today, 27.34. This might be, if it's not three newcomers, it's three names we haven't talked about in quite some time here. Trading today, like I said, 27.34, up a nickel, so kind of bucking the downward trend on the day, but not a huge day for them. Let's look back into the dark echoes of the past here. A year ago, they were trading $32, so about 5 handles north of where they are right now. Then they sold off pretty hard. Also, Christmas Eve being the nadir for them, down to about $22. They sold off about 10 handles over the course of the year. Then they rallied back up again in March to about 28.5, almost 29, and then sold off again to about 24, and they kind of been bouncing in this 24 to 28 range ever since. We're at about near the upper end of that near-term range, 27.30. Let's see what we found out here. Oh, looks like maybe someone, first off, looked like just some calls. We dug a little bit deeper. Looks like it was indeed maybe definitely a vertical, maybe a bit of a roll. It was 7,500 of the June 28 calls going up for 60 cents, and 7,500 of the June 29 calls also going up those were going up for 25 cents. So again, doing the whole spread for 35 cents, as the Irish like to say. Opening on the 29s, not opening on the 28. So it has all the hallmarks of a roll, which is weird, because usually when people are rolling up, first off, he only rolls up a handle. That's kind of interesting. So he's paying 35 cents to go up a buck. I think there could be a debate about that. But also, usually when you're doing this, listeners, if this is indeed a roll, and again, it didn't go up mark spread, but they were so closely linked in time and everything else that you could kind of look through the tea leaves and see what was going on there. Usually when they're rolling too, they usually try to get themselves a little bit more time. So they maybe would roll from June 28 to, let's say, the July 30s, something along those lines, rather than going up one handle. So, Mr. Meatball, let's look at it like it is a roll. What are your thoughts on A, paying 35 cents to roll up a handle, B, to do it all in the same month? I got a feeling this isn't going to be high on your savvy scale, sir.
No, I don't get it. This is a broker-friendly trade, as we would call it. I'm not quite sure the logic. Maybe it's related to something that happened off floor, or something that there's always some reason that somebody's doing it. But again, this one feels a little more broker friendly than savvy customer.
I could see Colin being excited by this one. It does have an air of love your broker about it. 15,000 contracts to do not a whole heck of a lot at the end of the day, quite frankly. So yeah, I don't know if we'll keep an eye on that one, but we'll keep an eye on the other two. See how they work out, listeners. Give us your thoughts on those. What do you think went up? If you like them, if you don't, maybe you have your own trades you want to do around those. Let us know. Meanwhile, we're going to keep on rolling into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it's Monday. I'd like to kick off the week with a little bit of learning, a little bit of the old edumacation. Who better to do that for you than Uncle Mike Tosaw? Uncle Mike, in this environment, whipping around, moving around like crazy, it's easy to get a little hot and heavy, easy to get a little bit in over your head, maybe putting on one or two too many legs on that trade, maybe putting on one or two too many trades out there. So what do you have for advice for our folks out there who maybe are a little bit over their heads in these crazy turbulent markets, sir?
Keep it simple. I've told this story on the show before, but I want to tell it again to kind of set the stage for what I want to go through today. I remember this was maybe a very long time ago, probably 15, 16 years ago, maybe not that, I don't know, a long time ago. I was newer to trading, and I was concerned of some macro announcement coming out, and I forget if I had short calls or short puts on the 10-year note. I was doing this with futures options. I was trying a different strategy, and when doing that, I realized, I'm kind of exposed if we get a lot of movement from this announcement that's coming out. I forget if it was retail sales, unemployment. I don't even remember what it was, but it was some type of macro announcement that was definitely going to affect the 10-year note. So I'm like, all right, well, let's trim some deltas off the table here. So I adjusted the position. Like, wait a second, though. If volatility changes, I'm in kind of a hurt locker there. I better change this. So I bought some more calls or did something on it. I forget what it was. I'm like, but then I'm still vulnerable to this. I better make another adjustment here. So after about an hour of analyzing everything and adjusting, I'm like, you know what? I feel good. I think I'm ready for everything now. I think that this announcement, if this doesn't come about, I think this is going to be, I feel really good about where I'm at. But then I looked at my position delta, my position gamma, my position theta, my position vega, and all these things, and they were all about 0 at the time. So what I realized, what I just did, was I had shielded myself from every possible thing with which I could have, but I basically put myself into cash. And so it did me absolutely no good to do what I did. I could have just simply gotten out of the current position I was in. It would have been pretty much identical. So the lesson I learned from that is that no matter what you do, there's always going to be some risk on the table somewhere. You're never going to be able to make everything exactly how you want. There's always some type of exposure somewhere, and you have to be prepared for that exposure. I think it's very important to know where the exposure is in terms of, are you exposed to vega, are you exposed to delta, are you exposed to gamma, theta, whatever the case may be. But have an understanding that there's always going to be some type of exposure somewhere. Oftentimes, when markets are volatile like this, people, I've seen just in the 15 years that I've been working with retail traders in some way, shape, or form, the tendency is to want to over-adjust, meaning that you want to feel like you're in control and you're going to try and adjust the exposure to make the position better. Well, that's tough to do. And where I'm going with this is that adjustments are fine, but you need to have the plan in place before you actually get into the trade to make the actual adjustment itself. So for example, let's say that you're short a put. If you're short a put, then you should have a plan saying, okay, if the market goes down to a certain level, at this level, I know that I need to roll down the put, or I need to do whatever type of adjustment that you're planning on doing. And then do that adjustment and be disciplined to actually make that adjustment. The problem that I'm seeing is that if there's no plan going into it, then all of a sudden the market goes down to a certain level, and then you're scrambling to try and come up with adjustments. So you're like, oh no, I got to work. What if this goes down here? I got to do this, or I got to do this, that, or the other. Then all of a sudden you put yourself into a situation like one of two things. Either one, you end up putting on way more deltas than you wanted to in the first place, or getting way more exposure than you wanted to in the first place, or you're going to get way less exposure than you would before, and it's going to be a problem. So the message that I have for today is, number one, make sure what adjustments you want to make before getting into it. But number two, don't try and overcomplicate it. The deeper psychological problem with that is that you're trying to control the uncontrollable. So here's what I mean. When you're 100% in cash, you're in full control of your money. The market has absolutely no control of your money. However, the second that you buy a call, buy a put on a spread, whatever position that you're putting on, you don't have control over that money anymore. You have absolutely nothing that you can do with that money because it's exposed. So what happens is that when something goes against you, you may want to try to control it. You know what? I am smarter than all this. All I need to do is adjust this, and this, and then that'll make it better. I may have to wait a few days till this time decay goes into effect, but yeah, this will make it better. Yeah. Because if it goes down another 2 standard deviations, that's the only way it can hurt me. But what are the odds of that? Come on now. And so you start thinking like that, and it's very dangerous to think like that, and you ultimately end up over trading. Now, it's dangerous because you end up in love your broker style trades if you do that. But what's more dangerous is then you try and create the hopium goggles. You wear the hopium goggles, meaning that you start to feel like you don't want to take a loss on the trade when ultimately you probably should have in the first place. So with that, don't over adjust. And if you are going to adjust, make sure you have a plan of how you're going to adjust, or at least have a pretty good idea of how you're going to adjust before it gets to the point of where you need to adjust. And that is the strategy block for today.
Colin, you must have something to add to this. After all, people are calling you guys up all day long. Literally, that's in the job description, asking you, coming to you with trade ideas. What do you think about this? What do you think about that? How do I do that? How often do you feel people have really, A, thought those through, B, have a plan, like Uncle Mike was just saying, to adjust when it hits the fan, and C, are able to really keep it simple. I bet you a lot of people are kind of approaching you kind of like they do us here at the network with like, hey, I got this crazy multi-18-legged monstrosity I've created. What can I do to get out of it? So is that a scenario you encounter quite a bit, Colin?
Unfortunately, too many times we come across this. It can't be overstated of the idea of keeping it simple. A lot of times people start using it as a crutch instead of really what it's supposed to do, which is trying to fine-tune your outlook that you come across. So a lot of times, instead of having an exit plan, they substitute it with, I'll just adjust it and I'll be fine. A lot of times they don't realize that when you make some of these adjustments, it's introducing a new type of risk into the trade majority of the time. And they don't even evaluate that risk. They just say, well, it puts me in a better position than where I was before. And just as he said, instead of just closing out, walking away, okay, trade didn't work, there's the idea of, well, I just don't want to be wrong. And really the reality of why we trade is to make money, not, a losing trade is just part of the process. So a lot of times we lose sight of that and really get focused on, well, the shiny object in the room, which is I'll just adjust my way till eventually it works out. And I hope that everything falls in place. And that happens all too often. And people really lose sight of that very important message of, look, just keep it simple. You had a game plan. There's a reason why you had, nothing wrong with sticking to it.
And nothing wrong with us sticking to our game plan. We got a couple of minutes here. Maybe we could squeeze in a really quick, maybe a silly edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to a fun-themed edition, shall we say, of the Mail Block. Mr. Meatball, this one's going to be for me and you only because I don't think the other two can play. But really, just because it's all on top of everyone's lips, everyone's tweeting about it, everyone's talking about it, I thought we'd have our question, our poll of the week, be something a little bit fun, a little themed along the lines of the Game of Thrones finale. Don't worry, we're not going to spoil anything for you. We just put in a fun little question for you, which is quite frankly, in honor of the Game of Thrones finale, we have a special edition of our question of the week. If you could have bought calls on one character to win, to take their seat on the Iron Throne, win in quotes, who would it have been? Quite simply, who did you want to end up on the throne? We gave you 4 choices. These are just 4 popular fan favorites coming into this season. There's no determination here. One of these is the winner or the loser. Could be on this list, could not be on the list. You don't know. So don't worry about spoilers here. Just have fun with it. So Mr. Meatball, we gave them all 4 choices out there. Tyrion, of course, the imp, the dwarf, Jon Snow, a beloved fan favorite character for many years now. Daenerys Targaryen, a formerly fan favorite character. I'll leave the rest of that to everyone's imagination. And Arya, a long-term favorite, one of my favorites out there. Mr. Meatball, again, we're not going to spoil anything. I'm just curious. A, if you had a pick of who you wanted come into this season, who you wanted to see on the throne, and then B, perhaps more importantly, what do you think our audience is picking, sir?
Well, I was surprised that you didn't have Sansa on the list because
I was going to, but I've always been more of an Arya fan than a Sansa, so I swapped her on just for fun.
So my selection would have been the dragon. I would have picked the dragon to end up on the Iron Throne. The dragon could be, talk about leading by fear, right? You know, if Daenerys can kill, can lead by fear. How about if it's like, oh, it's not even like a person, it's a dragon. So that would have been my pick, and I'm going to guess, the audience was call buyers of Jon Snow, as almost everybody was, until the writers decided to. I mean, who do you think botched things more? The writers of the 8th Star Wars episode or the writers of the final season of Game of Thrones?
Ironic, because both of them now have been tapped to make new Star Wars spin-offs. The Game of Thrones guys are making a new trilogy, and so are, or at least a movie, and so is the guy who did Last Jedi. So
the guy who did Last Jedi, I mean, is anybody not shocked that he's not doing the 9th episode? Last Jedi is garbage.
He got rewarded with his own spin-off trilogy. So
I think that was a reward that was a quote-unquote reward, which is really we're giving you something else that we may or may
Keep
not
you busy.
pick up.
They could just fire him. They have fired a lot of other people.
Yeah,
so,
that'll get you out of the way. I mean,
so
they
two
did the
very
same thing
contentious
kind of
teams are people heading up the new Star Wars out there. And I'm with you. It does seem like the last season and a half or so we're quite rushed. I think, which is because the showrunners wanted to move on to Star Wars. It seems like, and so they took a show they've been carefully crafting over the better part of a decade and crammed the all end into a couple episodes, right? Which
it was like I said, it was like what they did to Star Wars, where it's like we've built all this really interesting, what's going to happen, only to crap all over it.
Yes, well, I was surprised Daenerys didn't get more love, but then again, I think some of the things that have happened over the course of this season have turned some fans against her, shall we say. I will say the imagery of her with the dragon wings in the last episode there was pretty impressive.
That was pretty interesting.
That was pretty cool.
I noticed that. I did notice that.
They
that
were
was cool.
Clearly going for a strong, shall we say, Nazi rally vibe there at the end with the black. It was good. I'll give them points for that. You can slam the rest of the season if you want, but that imagery was pretty good. Yeah, and you're right. Our audience is loving themselves some Jon Snow, a.k.a. Aemon Targaryen, a.k.a. 64% in our poll right now. Again, that's no indication he won or did not win. It's just who our audience wanted. Who did you want? Get in there and vote. It's a fun way to kick off the week. Meanwhile, we got to kick off the end of the show by heading on into the trading block. Around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Surprisingly, not more love for Arya in that poll. I get it. She's a little bit of a psycho, but she's kind of fun at the same time. All right, let's. Maybe you don't want a psycho on the throne at the end of the day. All right, let's keep on rolling. Let's go back the way we came. Let's start with, the way we came. Let's go with Colin first. Colin, a lot to keep an eye on for the rest of this week. What is on yours and Fidelity's radar for the rest of the week, sir?
Yeah, some things I'm looking at are durable goods. That's coming on at the end of the week. Some of obviously, a lot of macro events, which is keep my eyes on what's happening with this trade war and all the rhetoric that's going on. As well as, the technology space, what's going on with that. I mean, there's obviously concerns there. So it's going to be interesting to see how that plays out because obviously it's a big impact so far today. And then another thing that I've been looking at is I'm going to be interested to see how the S&P is going to continue to react. So Thursday and Friday was very interesting price action because it's been almost magnetized to the 50-day moving average. So it's been there and just kind of playing around with it. So on Thursday and Friday, it pierced up through, then pulled back. And then on Friday, it went all the way through and then was pulled all the way back and fell below it. And now we open up back below it. So it's going to be really interesting to see if the S&P is going to try and push back up to that 50 or is it going to fall from here. So those are the things that I'm really focused on for this week, and especially how the S&P is going to react. See if it can choose a direction around this 50-day moving average.
It is vacillating hither and yon. We shall see which way it chooses, if it does indeed choose at all. If we got more vacillation in front of us. Uncle Mike, I know which direction you wanted to trend in. What are you watching for the rest of the week, sir?
3,000. I'm continuing to watch that for 3,000 on the SPX. I think that it's going to be a key number in some way, in that it seems to be 2,800 seems to be the magnet number. We can't get very far away from it in one way, shape, or form right now. But I'm curious to see at some stage if 3,000 becomes the new magnet number. Just also watching just the sectors, and that if you look throughout the sectors throughout the day to day. Of course, technology is the one that has really been hurting the market the most for where we're at. But in terms of the financials are still positive on the day. And so I think that really says something for the strength of the market in general, and that the fact that we still do have strong financials, at least with XLF being positive on the day, I think that's a good sign for the market.
All right, and last but not least, Mr. Meatball, while you're drowning your tears over the end of Game of Thrones, sir, what are you watching for the rest of this week?
Yeah, and you know what? Can I just say one last thing about Game of Thrones? How come nobody has made the I'm surprised I haven't seen this online about how its crappy ending was very similar to the crappy ending of Return of the King in Lord of the Rings.
People have made that comparison.
It was almost exactly the same.
The multi-part. Well, yeah. Well, he's obviously influenced by Tolkien quite a bit, right? And so
But that ending was almost exactly the same. Where the one kind of roamer goes off on the boat.
Wait, don't tell the ending. Don't tell the ending to people.
I basically just did. Listen for this.
If you get mad at spoiler, don't get mad at me. Mark at option.
If you hated the ending of Return of the King, boy, have I got an ending for you to hate.
Send your hate mail to Mark, not to me.
Like I said, I'm looking at a market where we're down 0.5% in the S&P. We're down 1.5% in the NDX. And VIX futures are flat on the day. I'm looking for a market that is gonna get bought. They're selling premium into these dips, and I think that we're lining up for maybe a little softness today, and then maybe a little bit of follow through face ripping that we saw midweek last week. And then to maybe run to 2,900 and sit around there. I like markets I like vol to end the week probably closer to 14, maybe lower than where it is here, because there's just no appetite for premium.
All right, that music, listeners, means we're good. By the way, 14. That wouldn't be too bad for my option, or should be volatility views. Prognostication. We've got a whole week to go. A lot of great shows coming at you this week. We're mixing it up again. No crypto runner after this one. I know it's been all over the place, but it's still coming. It's coming at you tomorrow. That worked better. Again, the schedule is for the guests on the show. Sometimes it's like herding cats. So we're doing that one live tomorrow. So look forward to that. So you get a break here in the afternoon. If you're listening on the podcast feed, you'll get it a day late, but you'll still get it. So stay tuned for that crypto goodness. Before we go, let's go back around the horn, check in with everybody, see what they have cooking. Let's start one last time there in the Fidelity Iron Throne. Colin, sir, what if people are interested in what you're talking about? Maybe they want to call the strategy desk for themselves. Maybe they just want to kick the tires on some of that Fidelity options goodness you were talking about here earlier. Where should they go? What should they do?
Yeah, so if you are ever interested about the options offering we have, definitely take a look at www.fidelity.com/options. It goes over the option offering we have, as well as the analytical tools that you can use to help you out make that decision. And if at any point in time you want to have a conversation about your approach to trading, whether it's looking at charts and having someone to run that by, or the option strategies and evaluating your alternatives, give us a call at 877-907-4429 and ask to speak with a trading strategy desk, or you can even ask to speak with me. Love to have that conversation with you.
Hey, don't let that last Emperor and Trey have all the fun. Call up Colin. Give him some questions. They've got all these questions, Colin. We got to get some for you. That way you don't feel so left out. So give him a call, kick the tires, and light the fires, as they say. Fidelity.com/options is the place to go. It's all baked in. And if you sign up for an account, you can call up Colin and everybody else over there and ask them about your 18-legged monstrosity. Maybe they can help you out. All right, and if you don't want someone to manage, perhaps babysit your 18-legged monstrosity, maybe cut it down to about 10 legs for you. Maybe you want to call Uncle Mike. Uncle Mike, if they're intrigued by such things, where should they go? What should they do, sir?
By all means, go to my website, stcharleswealth.com. I would love to have a conversation with anyone. And then also on a local note, in addition to the Option Club that we plan having sometime in the next month, date to be announced, if anyone is in the Yorkville area on Saturday, June 1st, it's the 14th annual Sweetness Run, the Walter Payton Sweetness 5K and 8K. For more information on that, go to Payton34.com. I'm actually going to be one of the NFL alumni passing out trophies at the end of the event. So stop on by. It's for a great cause, for Walter Payton, the Walter and Connie Payton Foundation.
There you go. Check it out. See Uncle Mike give out some trophies for charity. And maybe give him a call if you want to have somebody babysit your puts for you while you're out there running. There you go. That's a perfect use case for it. And last but not least, Mr. Meatball, I don't know if you have any seats left for the big Palooza, but if you do, and if folks want to come to Chicago to see you, where should they go? What should they do, sir?
I was muted again. So I just had one person drop out of our VIP event, which means I have one slot open for VIP. That means you get to come to a Cubs game with me. You get to come to dinner with me and Mark. You get to see some awesome education, and you know, I've heard a little birdie said there might be a surprise appearance by one former offensive lineman for Buffalo Bills on Friday as well.
You know, he doesn't leave St. Charles very often. There you go, one opening. You know, so listeners, we'll make sure we'll tweet out a link to all that where you guys can go register and subscribe. If you are going to be in the Chicagoland area, you owe it to yourself to come by, not just to meet Uncle Mike, but there's a lot of good learning going on. The steak itself is quite tasty. Good stuff. So check it out, optionpit.com. We'll put all those links out there for you in the show notes as well, so you guys can get at it for yourself. Grab that seat before it's gone. And on behalf of Mr. Meatball and Uncle Mike and Colin and the rest of the crew over there at Fidelity, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for asking questions, for voting in our polls. Silly as they may be sometimes, but fun. I want to, and Gus, just keep tuning in. We'll get Crypto Rundown for you tomorrow. All tons more interview content hitting the network. Stay tuned for all that, and then we'll see you back here on Thursday for more of The Option.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.